home office is a big one, and it's a deduction. Okay, it's specifically allowed in the tax law, and it's got very specific requirements. Okay, and I'll give you a couple of the requirements. One of the big ones is it has to be an area in your home that is used for nothing but your home office. So don't put a bed in there. I mean, I'll tell you, I'm actually recording right now from a room that is not qualified to be a home office. It has a bed in it. Okay, it has my grandson's crib in it. This is not qualified. So I don't take this space, even though I record in here, I don't take this space as a home office. I do have other space that is just for home office, and that's what I take for my home office. So understand it has to be only used for business, and that's an important one. The IRS will ask you that. But what I get a lot is, I get a lot of people telling me that their accountant told them not to take the home office deduction because it raises a red flag. And if you ever get told that, it means that it's time for a new tax preparer. Because if you do it right, the home office has not been a red flag for over 20 years. Okay, 20 years ago, 25 years ago, it was absolutely a red flag. But today, what the red flag is, when you have to disclose that you have a home office, is when you're on a Schedule C. Now, a Schedule C, meaning that you're a sole proprietor, is a red flag, but it's the Schedule C that's the red flag. Okay, the home office is just a secondary red flag and the only reason you disclose it is because you have a Schedule C. So having that Schedule C is just, it's bad. You have a 5 times greater chance of being audited with a Schedule C than without a Schedule C. So there's your red flag right there. And that basically, by the way, that's strategy number 3, but we're going to come back to strategy number 2. Strategy number 3 is never have a Schedule C.
What? Okay. Are we ready to talk about that, or you want to come back?
No, let's go back to home office, because home office actually is a much bigger deal than people think it is. People, the other thing the accountant will say is, well, it's really not that much. Well, okay, let's say, for example, that you have 10 rooms in your home, and one of them is a home office. That means that you're going to be able to deduct 1/10 or 10% of everything you spend on, basically everything you spend on your home. So your maintenance, your cleaning, your utilities. Now, mortgage interest is not as deductible as it used to be. Taxes are not as deductible as they used to be. All of these things, if they're in your home office, now they're deductible, okay? Because there aren't the limitations, right? On business taxes. Business taxes don't have the same limitation as personal taxes. So you have all of these benefits, but here's the big one. And this is one nobody ever gets. So cars, right? People don't deduct enough of their cars. And here's why, because they don't have a home office. So we're going to connect the two here. So the very first trip you take during the day, let's say you go from your home and you go see a client. That's considered a commute. So that's non-deductible. And then you go see clients all during the day and you come home at night, and that last trip home is a commute. So what that means is probably 40 to 50% of your travel during the day is that commute to and from either a client or an outside office or something like that. All right, so that means that let's say your car is right now is 50% deductible because you only use it for 50% business because the rest of the time it's commuting, right? Now all of a sudden you have a home office. All right, every morning you go to your home office and you commute 30 feet.
I love it.
And then your very first trip out to that first client is no longer a commute. When you come back to your home office. You then commute 30 feet from your home office to your kitchen. So here's the thing. This is in the IRS instructions on home office. They actually talk about this, that by having a home office, you have to use it, right? Okay, so you're actually doing your administrative work in the morning at your home office. I do this every morning. I start my morning with my administrative work. I go check my emails. I do all that good administrative work. And then I start, into my day and doing things that I might do them at my home office, or I might have to go into a meeting at my office at work. Now, here's another thing people will say. Well, tax preparers will say, well, you can't have 2 offices. That's not true. Okay. Now, there's very specific rules, and you need to sit down with a tax advisor to really understand what those rules are. But you can make, what's important for your home office is that it's your primary office. Okay, it has to be your primary office, and there are very specific requirements that you need to talk about with your accountant to know what those are, because they're very, very specific, and they're going to be different for every different situation. So I'm not going to talk about them here. But the key is you can't have, for example, my office at my CPA firm. I go there only for meetings. That's the only time I use it. The rest of the time I'm in my home office. Okay, so my home office is very clearly my primary office. Okay, it's very clearly my primary office. So I always start first thing in the morning. I do my administrative work. I may then go to the office for meetings. I might go see clients. I might go see some real estate that I have, and then I come back at the end of the day. I'm going to come back to my home office. I'm going to clean up, at my home office for the rest of the day. Well, what that does is now the car, right, has a much bigger percentage of business use. And remember, your car is only deductible to the extent of your business use. So if you can shift your business use, let's say you buy and here's going to be your strategy number 4, which is where you'll see that these are all connected. These strategies all get connected. Is bonus depreciation. So we now, let's say you go buy a $80,000 SUV, and it weighs at least 6,000 pounds, because that's what it has to weigh. Well, now you have a home office. Okay, well, that instead of being 50%, now you're 90% business use. 90% of that $80,000 or $72,000 is now subject to bonus depreciation, which means you get to deduct $72,000 the year you buy it. So because you have a home office, see, if you were, let's say you didn't have a home office and you were less than 50%, you don't even get bonus depreciation. But now you're more than 50%, you're now 90%, and you're going to get bonus depreciation because you have a home office. So, for all of those accountants out there that say home office is a waste of time and you just don't get very much, I'm going to say, look, $72,000 for most of us would be a pretty nice deduction to have, and would wipe out an awful lot of income. At a 30 or 40% tax bracket, that's a huge, huge number. And that automobile expense is there because you have a home office. So it's not a home office deduction, it's an automobile expense deduction, but it's a big deal.
Yeah, it's crazy, because when bonus depreciation came out, there was you remember I called you last year, there was actually a scenario in which I could get rid of my existing Range Rover and buy a brand new one and come out on top.
Right.
But, we talked about some of the rules around that and all of this. But if you understand the rules and if you connect all the pieces together, there's actually some really great benefits that you can achieve.
Thanks for listening to The Fighting Entrepreneur with your host, Anik Singal.